is the chairman and CEO of Suffolk, a leading national general contractor, renowned for its innovative approach to building and construction. Under his leadership, Suffolk has grown to a greater than $6 billion a year business in annual revenue and employs 2,500 professionals in markets across competitive sectors. John is deeply involved in community and civic leadership. He's the chair of the Board of Trustees of Boston College. He's the chair of the board of Brigham and Women's Hospital, and he chaired the Real Estate Roundtable, the real estate industry's top federal advocacy organization, and he just recently, after 3 years, has stepped down and transitioned out of that role. John's vision for Suffolk emphasizes excellence in construction and a commitment to redefining the industry through technology and innovation. Suffolk, under his leadership, has spearheaded several iconic projects, including Boston's Millennium Tower and also the Encore Boston Harbor, and then more locally here on campus, 245 Beacon, which is the home of the Schiller Institute, and the Hogue Pavilion adjacent to the Conti Forum. His dedication to philanthropy and community service is evident in his founding of initiatives like the Scholar Athletes Program, which supports young people in achieving their academic and athletic dreams. With a career spanning over 4 decades, John Fish is not just a builder of structures, but a builder of people and communities, making him a pivotal figure in the construction industry and well beyond. It's with great pleasure that I introduce John as the inaugural speaker of the Real Estate Colloquium at Boston College. Please join me in welcoming John Fish.
Neil, thank you very much for that wonderful introduction. And I just want to say welcome back to all the Eagles. It's a pleasure to see the campus vibrant again. I spent quite a bit of time over here with Father Leahy and some of the other administrators, and I would tell you that it's an honor and privilege to be associated with Boston College, and I say it from the bottom of my heart. What I really cherish the most about this school is the students, okay, and the faculty, the administrators, and the values that this school espouses. And I can't tell you, because I travel the country quite often, we have something special here. We all should be very, very proud of it, and it's special because of people like yourself. So give yourself a round of applause, please. Thank you. As the professor said, I'm honored to be the first guest speaker of this year. I know you've got a tremendous lineup, and so I feel very, very fortunate to be part of that lineup. And hopefully we'll have a very interesting conversation today. And what I would also like to acknowledge is that Joe Corcoran was a very close friend of my dad's a long time ago, and a close friend of mine and his family. And so I'm honored to be standing here in his school of real estate. And I will tell you, it's probably one of the best in the country. And I'm sure you're going to have a very, very interesting year. And I want to wish you all the best of luck. And I'd say this to you, anything I could ever do going forward with respect to construction, real estate, you think I could be helpful, don't hesitate to let me know. I mean that very, very sincerely. Any BC Eagle is a friend of mine. And I say that very, very sincerely. I want to start today with one very sort of broad comment and ask, why would anybody want to get involved in the real estate business today? It's the worst I've ever seen in 43 years, okay? The worst. Let me walk you through that, okay? It's a complete mess at the end of the day. Interest rates are sky high. Vacancy rates are low. Construction costs today are greater than the value that you create by the build. Think of that. Construction costs are greater than the value you build at the end of the day. Probably 50% of commercial real estate assets in the country right now are underwater, for the most part. And you have right now about $1.5 trillion of loans coming due in the next 18 months. And a lot of those loans have been extended over the last 2 or 3 years, okay? But now those extensions are coming to terms and they're coming due. So when I say it's a challenging mess, it is a challenging mess. And that breeds opportunity, okay? You can look at that as a challenge or you can look at that as an opportunity. So what I often say is that there'll be some substantial losers in this time period, and there's going to be some phenomenal winners. And what I often say about real estate is cyclical. Okay, history repeats itself. So what I thought today what I would do if it'd be helpful for you, I'd take a step back and try to explain to you the different evolution over the last 100 years of how we got to where we are today. It's very, very important. And when I walk through those different periods of time, you'll understand the significance of them. And you'll also understand why we're doing certain things the way we're doing today and haven't really innovated at the end of the day. I'd like to tell you a story to bring it to start out with. Back in 1930, 1931, 32, the Empire State Building was built in New York City. Okay, one of the largest buildings in America. Okay, and when you take a step back and think, how long did it take to build the Empire State Building? Okay, 13 months. Today, that building would take at least 5, if not 6 years to build. Okay? Why that was the case, 2 primary reasons. One is construction drawings, the process of design development, okay, and working drawings were perfection. We're called blue line drawings. Architects were respected and paid for their services. Secondly, general contractors, okay, were general contractors. They were the builder, the master builder. They did the mechanical, they did the electrical, they did the masonry, they erected structural steel. Everything has changed from that date on. Remember that story, okay, back in 1930s, and look what we are today in 2024. So I'd like to walk you through a couple periods of time that I think are very, very important that highlight my point. One, back in 1940 to 1970, 75, that period of time. Okay? When I think about back what happened in 1940, that was right after World War II. Okay? You had the New Deal. What the New Deal signified is everybody in this world in America wanted to live the American dream. Every part of that American dream wanted to own their own house at the end of the day. And so people started migrating from the urban areas to the suburban areas. And all of a sudden there was a proliferation of construction and infrastructure that went on during that period of time. And what happened? The development construction process accelerated rapidly, very rapidly. There's a lot of federal money involved in that as well too, okay? The quality of the build started to decline steadily at the end of the day. And the demand for housing and infrastructure work outstripped supply. So gradually increasing costs over a period of time. Move on to the 80s, early 80s. We all recall back in 73, before you were born, we had OPEC, we had energy crisis. And during the late 70s, with energy being a primary source in an overseas issue in the Middle East, okay, interest rates, okay, went up to 21% in 1982, okay? Inflation went to 14.5%, skyrocketed. So if capital is costing us, okay, almost 21%, what do you think is happening? The industry came to a standstill back then at that point in time. So what happened at the end of the day is that the industry had to figure a way how to get out of that. So what was the first thing as a result of that stress that happened? Okay, is all of a sudden we started commoditizing the process more so than we ever did before. Okay, architects, okay, started to be getting paid lower fees. As a result of lower fees, what was happening is the quality of drawings that they were producing wasn't nearly as good as they were back when we talked about those blue line drawings. Very significant. What happens from that point on? Okay, general contractors, okay, were working off a set of drawings that weren't nearly as good as they were before. So what did they do? They subcontract out their risk. So where a general contractor back then was doing their own masonry work, their own structural steel work, their own electrical, mechanical, the industry stopped doing that. And all of a sudden people started specializing in electrical, mechanical, erecting steel, drywall, and various other trades. And that happened because the general contractor was no longer a master builder, because we started diluting, okay, the process of real estate in construction and how it all came together, if that makes sense to you. Tremendous pressure on cost. Therefore, the cost pressures were put on the architect. the cost pressures were put on the contractors. The general contractor wanted to take less risk. And so what happened, you transferred in the 80s, early 80s, from a construction general contractor to a construction manager, okay? And what happened then is fees continued to come down. And that was a very significant point in our business, because when you think about a seamless platform, general contractor building a project, and he's responsible for all the different trades himself, right? The profit margins are just his. Now all of a sudden you're introducing an electrician, a plumber, a drywaller, and all of a sudden you get these siloed sections in the construction industry, okay, which is very, very important. And things became really siloed and inefficient, and people stopped talking to each other. Let's move on to 2000 to 2008. The construction boom picked up again. Now, why did that happen at the end of the day? And you'll see the cyclical nature of what I'm talking about. Interest rates, monetary and fiscal policy started to come down from that high level that I talked about in the 80s, and through the 80s really came down to a much more competitive rate where people could pencil out these projects, okay? Fiscal policy, tax structures, there was a lot more tax incentives for people to build, okay? But what was happening, the industry continued to be fragmented. And that's because, in my opinion, the master builder, okay, was eliminated at the end of the day, okay? A very important issue for the construction real estate trades. Then moving on to 2008, the Great Recession. That should have been the most important period of time in my lifetime for construction and real estate, okay? The world came to a standstill. I'll share a story with you. I was in the Boston Harbor Hotel. Back then, Suffolk was probably about a $2 billion business at the end of the day, okay? And I was sitting there, where I'll never forget this happened. My phone rang in a 4-hour period of time. We lost half of our backlog when that happened. Over $1 billion in 4 hours. Jobs being stopped, jobs not going forward. And then all of a sudden, some subcontractors were going out of business because Atlantic Credit got called. The industry came to a complete screeching halt at that particular point in time. And I'll tell you, and I said to myself, this is the opportunity to reimagine what our industry could look like at the end of the day. But what happened in our industry at that point in time? We didn't innovate. It was a missed opportunity. Never let a crisis go without taking advantage of it. We didn't do it as an industry. We didn't do it as a sector at the end of the day. So what happened 4 years later, things picked up again, okay? What you had from 2012 to 2019, okay, with the economy being in such tough shape, the federal government stepped in, lowered interest rates again, okay, implemented monetary and fiscal policy, and gave much more incentives for the real estate industry to pick back up again. And so you had 2012 to 2019, a tremendous boom in America going on. It was almost so much so that you could be a person without a lot of experience making a lot of money in the real estate business, because it was that easy at that particular point in time. I'm not being facetious, because we do a lot of work around the country. I go down to Miami, I see these young men and women driving these Lamborghinis, okay, these Rolls Royces. It's a 29-year-old young men and women. It's not that easy. This is a very volatile business. You've got to be very, very careful. Things can change on a dime like they did in 2008, a screeching halt at the end of the day, okay? And I just want to emphasize on 2008 why the industry collapsed at that point in time is because of the mortgage-backed security business. If you guys ever saw The Big Short, okay? A guy named Jeff Green, who I know pretty well, who was The Big Short, and he's crazy as he is in the movie. But that's exactly what happened. But again, it was excesses at the end of the day, okay? And it really rot our industry. But moving back to the period of time, 2019, what we saw at that point in time is higher costs, okay? People were accepting those costs. You could pass those costs on to the consumer at the end of the day. The key about real estate, if interest rates are going up and the cost of capital, okay, and your construction costs are going on, can you pass those costs on? And that's the challenge that's going on today, which I'll talk a little bit more about. Then all of a sudden, we move into 2020 to 2022, okay? And at that particular point in time, what we saw at COVID, never forget it, right? March of 20, people recall, $100 trillion economy shut down. You were at $300 trillion when I was standing up there. The global economy back then was $100 trillion, completely coming to a standstill at the end of the day. People had never in our lifetime ever experienced anything like that. The more important question was to ask, if you've got an economy, a $100 trillion global economy shutting down, how do you ever get that economy back going again? Okay? We've never experienced that before. On top of the fact at that particular point in time, okay, when you think about it, tremendous pent-up demand of almost 18 months of pent-up demand. The government giving people's checks, putting almost $6.5 trillion in the economy. The consumer was not spending. Consumption is 70% of GDP, so we've got a lot of money on the sidelines right at that particular point in time. And all of a sudden, you've got excess monies around on the sidelines. You've got people, pent-up demands. You've got supply chain disruptions. You've read about those at the end of the day, which are extremely important, okay? You have inflation, right, unabated. If you use the word transitory, remember back then, Jay Powell was talking about transitory inflation. He waited almost about 15 months before starting interest rates. Then all of a sudden they raised interest rates almost 125 basis points over a 16-month period of time. Okay? A radical shock. It sent it to a standstill again at the end of the day. So all of a sudden, the idea of getting ourselves, starting up a $100 trillion economy, moving it forward, had a devastating impact on the overall economy and inflation and in cost of to do business. But then when you think of that specifically and pause and say, what happened to the real estate industry at that particular point in time? I talked briefly about the economy, right? And how to get that going, supply chain and various other types of things. And the consumer having more money in their pocket, right? People didn't buy appliances. Now all of a sudden everybody's buying appliances. People didn't buy cars. Now everybody's buying cars at the end of the day. Then you come back to what happened at that point in time. The single biggest thing, in my opinion, back out of COVID, was we changed the way we conduct business. Put aside the monetary and fiscal policy issues that we dealt with. This work from home policy, or work from home idea, singly, from my perspective, had the biggest impact on commercial real estate we've ever seen in my lifetime. All of a sudden you get these buildings, I want you to think about this, okay? There were 18 months, 19 months prior to that, before COVID, okay? 95% occupied, downtown urban areas, okay? Reducing down to 30% occupancy. So what happens when that happens at the end of the day, the value of those assets goes down substantially. And to make matters worse, okay, people are in the process of having to refinance their assets, okay? And if they're refinancing their assets and they're with a loan of 5 and 6 or 7% on the capital, now they're looking for 10 or 12, 13% cost of capital. The value of the building has gone down because of occupancy, okay? The demand is softened. The refinancing comes aboard and the cost of capital goes up, almost doubles. You get a perfect storm. And that's exactly what happened during the last 2.5 years. In the commercial real estate industry, as chair of the Real Estate Roundtable in Washington, it's a depression. It wasn't a recession, okay? In New York City alone, today, there's over 100 million square feet of Class B office buildings. They're basically worth the dirt they're on at the end of the day. So when you take a look at that and think about the impact that that's having on all of us, okay, it's a pretty sort of dire situation. So when I take a step back and think about what do you do at the end of the day? Here you are, young individuals, thinking about a real estate career. I walked you through different points in time relatively quickly of the cycle and pendulum that goes on in real estate. And we haven't really learned, in my opinion, from the mistakes that we made. We make them over and over again, and we say to ourselves, we're never going to do it. That's why I do think, for the younger generation like yourself, it's a phenomenal opportunity. The availability of data, the availability to connect people with each other, social media, the insights that you will have that the last generation did not have will be such a competitive advantage. All you have to do is pay attention, and as Neil would point out, it's a game of inches. And that's why I think with the crisis that we're having right now is probably the most opportunistic time to get involved in real estate. And make sure you understand leverage. And you'll learn more about it this year. It's a very, very important subject at the end of the day. So what I want to talk to you about now is what have we done as a company. I'm in the real estate business and construction business, okay? We invest in the GP side of the capital stack because we're contractors. We don't want to compete with our developers. So we put skin in the game, which is a very, very important process for us to be, so we have complete alignment. But really, at the end of the day, as I think about where do I want to take my company, as I say this very humbly to you, I own this year we'll do about $6.5 billion in revenue, nationally all over the country. The average size job we do is about $125, $140 million. We'll do a job up to $2.5 billion down to $25 million. And most of our work is repeat business. In aviation, mission critical data centers, infrastructure work, hospitals, life science buildings and things like that. And so it's a pretty diversified portfolio. But what is important about that at the end of the day is how do we play chess when other people are playing checkers? Because I own my company, and real estate construction sometimes can be a low margin business, okay? People don't want to invest. And that's why I think we have a tendency to eat our young in the business because of compression of fees and so forth. What I've done is I'm creating what I call a seamless platform, and I've been working on this since 2009, okay? We hired a chief data officer back in 2009, 2010, okay? A brilliant woman, and we've hired over 29 data analysts. It's unheard of for a construction company, okay? And we built out a clean data lake for our company. And by using data, it has given us an opportunity to measure what we're managing. You can't manage something you don't measure. And our industry as a whole is not accustomed to measuring throughput in construction, to be very candid. It's just not. Especially in a union environment, they don't want to put RFID or anything else like that on the workers on the job sites. You have to understand productivity in order to be successful. So what we did, we started the Capital Formations Group. A lot of you people are familiar with that. We're providing advice to our clients on how to put together the capital stack for projects. And what happens is we know a lot of private family offices, sovereign wealth funds, okay, boutique. We try to match our clients with the opportunities that those family offices want to provide. Sometimes the cost of capital a little bit more, but the term's a little bit less at the end of the day. So can we be a capital advisor to our developers? Then we also can do an SPV, a special purpose vehicle, be an investor in that deal as well too. The second thing I did is I started a design firm. One of the things I spoke to you about, which is very, very important, all you real estate developers, how important design is. So right now we have a design firm, Suffolk Design, okay, but we design a little differently. Okay, we're using artificial intelligence and machine learning in how we're designing. And it's in its infancy, but it's working. In order to get a building geometrically and dimensionally correct is extremely difficult. Think about construction costs. What if I told you 11% of construction cost is rework in a building? 11%. Can you imagine if you have drawings that are geometrically and dimensionally correct and coordinated, and you can cut half of that cost out? Think if you could lower construction costs by 6% right off the top. Okay? That's low-hanging fruit at the end of the day. So design is a component that we introduced to our organization. Technology. Back in 2018, we started investing in technology. I saw that wave coming, and nobody else around was doing that. And why we did that is because, think of Suffolk as a company. Say we have 100 to 120 construction jobs around the country. Think about what goes on in those construction jobs. Those construction jobs are test beds. So you get a solution coming out of MIT or BC or Northeastern. The young men and women don't have experience, but they want to take this solution, typically a SaaS solution, and put it on a job site and see if it works. So we have translators taking those particular founders, bringing them to the job sites, and trying to see if these solutions work. I'll give you one as Wint as an example. It's an Israeli company. Okay? It's an artificial intelligence water detector on a building. High-rise buildings, builders' risk losses, which I won't get into too much. If you have a water leak in a building, it can destroy a high-rise building very, very quickly. This is artificial intelligence put on the water main, and it can detect a pinhole leak in the building, so it sensitizes it. It will call your phone and tell you got a problem in the building. It's worth a fortune. So we're working with this Israeli company to put these on our job sites around the country because we do a lot of high-rise buildings. Okay? Now insurance companies like Liberty Mutual mandate that if they're going to buy a builder's risk policy, they have to use those on their job sites. I don't want to get too complicated, but it's pretty interesting. We've made about 46 investments through our technology fund. The fund is an SEC regulated fund. We raised it $110 million. But we're investing in the seed and Series A classifications early on because we know the business. Now what we're starting to think about is our fund 2, which is probably going to be about a $300 million fund. Does anybody know who Y Combinator is? It's a pretty special designation to be Y Combinator because very few people are doing, very few people understand it. Younger individuals, like people in this room, have much more of an affinity and understanding of technology and what technology can do than the older generation. And that's why I think real estate is a young person's game. Really, really is a young person's game. But technology is going to change the way we look at the business. There's no doubt in my mind about that. Then also what we've done is we self-perform. We have our own tower cranes, things like that all over the country. And we have about probably 1,500 carpenters, laborers who do concrete work, masonry. Now, what does that sound like? All of a sudden you see what I told you is that back in the 1930s, the Empire State Building, what happened? You had a master builder. Now, with artificial intelligence, machine learning, okay, and generative design, we're coming back to the master builder. So to me, as I see the industry as a whole, and I take a look at the volatility that we've experienced, the playbook's going to be rewritten. And it's going to be written by your generation. Okay? And I'm telling you this candidly. If you work hard, and you pay attention to the details, I often say this business is a game of inches. It's not a game of yards. It's a game of inches. Okay? You could be enormously successful. I'll give you one last story, then I'm going to close. There was a gentleman who was a mentor to me. His name was Tom Flatley. The name probably is not familiar to anybody in this room, but Tom was a trustee at BC for many, many years. Tom was an icon in the Boston area. Tom was an immigrant, a plumber from Ireland. He died a multi-billionaire. Okay? Tom took his plumbing skills from Ireland to Massachusetts. And he started a construction company, then started a development company. Okay? And built one of the most successful real estate development companies in New England. And very close friends, or personal friends, probably best friends with Joe Corcoran. And they're the two of them. Okay? And all Tom Flatley did was just work hard and pay attention the old-fashioned way. Enormously successful. But Tom told me one thing. He said, you know, it's interesting, when you think about real estate and construction, I put them all together. You know what a pro forma is, right? Pro forma, you break it down, 100% of a pro forma. 70% of that pro forma is hard costs, construction, bricks and mortar. 30% of the costs is soft costs, architectural, attorney's fees, and things like that. What if I told you 75% of all developers in the country don't understand construction that well? So you're telling me that 75% of the developers in the country, okay, don't understand 70% of their pro forma. They're relying on somebody else to advise them on probably one of the biggest decisions they're making, what they're going to build, what the cost to build, when they start things out. Very, very important issue. And Tom Flatley said to me, John, I'm going to tell you something. Make sure you never take your eye off the ball. Understand construction. The best developers in the country are ones that understand construction. That's why they're inextricably linked, development and construction. Don't rely on somebody else telling you, okay, in specificity, I'm telling you, and make sure you know how to ask those particular questions. It's very, very important. Now, what I want to close by saying this is, what lessons should we learn from the stories that I shared with you this afternoon? Think about that. What lessons? One, very important one, History repeats itself. It always does. Okay? You can count on that. But today, we're dealing in a whole different world with technology. I'm extremely thirsty and appetized by artificial intelligence. It's a game changer if used effectively and efficiently. And it's going to change the way real estate construction works. There is no doubt in my mind about that. And what drives artificial intelligence? Data. Data is key. I talked about measuring people. I talked about having a clean data lake. Anybody that's willing to make those type of investments, and they are investments, is going to be heads and shoulders above your competition at the end of the day. Then the question is going to come down to, with artificial intelligence, what you ladies and gentlemen know very well, okay? Like learning is being turned on its head. It is no longer about the answer that you give. You're trained by what the question you ask. Think about that. Today's world, what is the most valuable currency you have is what are the questions you're asking. Because the data is going to be there to answer them at the end of the day. And a lot of people don't understand. And that's exactly what's going to happen with construction. How do you look at things multidimensionally? And how do you get your competitive edge over everybody else? Okay? Second thing. Always take advantage of a good crisis. When you think about what went on in 2008, one thing that I did, I was fortunate because I owned the company myself. I'm a subchapter S corporation, is I invested heavily in technology. I mentioned it. My comparison companies in 2008 were no longer construction companies. I looked at Apple, Google, IBM. What were they doing? How were they branding themselves? How were they marketing themselves? And I knew I wasn't Apple and IBM. Don't misunderstand me. But what are the kernels of information I could find out how they were presenting themselves? How were they showing up? And I realized they were getting ahead, a competitive advantage, by using technology and data. And that's when we started the data journey in 2008. That's how long we've been on it. And yes, we were ahead of the curve at that particular point, and people thought I was soft as hell doing it. My gut told me that it made sense, but it was a crisis. COVID, crisis, okay? What are you going to do? How do you take a look at some of those distressed loans out there? That's what people are doing right now. And when you look at real estate, I want to remind everybody, okay? There's plenty other segments of real estate out there, categories other than residential, mixed use, and retail. Right now, data center work. We've got probably 27 data centers we're building right now in the country right now. These are anywhere from 40 meg, 50 meg, roughly around there, okay? Big facilities all over, Amazon, QTS, okay, Switch. It's a huge business today. Infrastructure work is not going to go away. That's going to continue to boom. Industrial is coming back right now. High-end hospitality, high-end residential, okay, is not going to go away. So there are plenty of asset classes during this period of turmoil, okay, or tumult, that you can get yourself involved in and focus on at the end of the day. So don't think your industry is dead at all. It's always an angle that you can take if you look harder. And always do your research when you take a look at that. Next, take risks. Especially younger people. I often say to people at Suffolk that the only way you learn is from your mistakes. The only way you learn is from your mistakes. I'm going to ask you a question. You have to answer me. How many people in this room have trophies in their bedrooms at home? Okay? I'm sure a lot of you. Do you really remember why you got that trophy? Okay? Now, let me ask you a very direct question about my saying this. Tell me when you got your ass kicked last time. Do you remember that? Do you forget that, especially athletes? Okay? You never forget that. Tell me when you made a major mistake. If you forgot that, no. I argue we have to allow ourselves to take risk. And don't be afraid to take risk. Calculate a risk. And I'm telling you, you will learn the best lessons in your life from the failures you've experienced. Just don't have too many. That's all I'm trying to say at the end of the day. But it's very, very important. After you looked at all the data, and else said, follow your gut. Have confidence in yourself. Because if you don't have confidence in yourself, nobody else will. And let me share one other thing with you, okay, in business. Often, don't listen to what people are saying. Watch what people are saying. Nonverbal communication in business is the most competitive advantage that I have. Why do I say that? I'm a severe dyslexic. Did not learn to read until 9th grade. True story. Today cannot spell past 3rd grade. Okay? And you could never read my handwriting. Went to Bowdoin College, only school in the country, didn't require SAT scores. I got twin 400s. But I lived in the library, and I played football. I used to weigh about 275. I cracked my neck. I lost 100 pounds. But I just worked. Okay? But one gift that I had is I could read people pretty well. Their body position, their facial expressions. Read the room when you go into it. Okay? God gave you 2 ears and 1 mouth. Talk half as much as you listen. Read the room. You'd be shocked at what you pick up when people come in. They all of a sudden show the hand completely. And all of a sudden it's a competitive advantage at the end of the day. Play chess when everybody else is playing checkers. When you go to the field, what tools are in your box? What are you bringing with you? You're in better shape? You worked harder? You know the plays better? Okay? It's a game of inches. And there always is a competitive advantage. There always is. Don't tell yourself it's a level playing field. If you want to unbalance that field and you're willing to work hard with a sense of integrity, okay, and hard work, you can be successful at the end of the day. Okay? So always look to how you get an edge on somebody else with a sense of integrity. And integrity is not a 5-day-a-week word. It's a 7-day-a-week word. And integrity doesn't go to sleep at 10 o'clock on Saturday night. Okay? Integrity is something that lives with you. Please don't ever forget that. It's important, and that's why you're at Boston College. And that's why I'm at Boston College. Lastly, relationships. When I was younger, very anxious, to be candid with you, didn't have a lot of confidence in myself, but I just could outwork everybody. And I didn't rely on other people to do things for me. I did it myself. But I was working over 100 hours a week, and I got myself sick. And I suddenly realized if I want to be successful, I have to delegate to people. I have to build relationships. The most important lesson I've learned in business, okay, in a real estate, in any business, is how valuable relationships are. Trust and confidence in relationships. Don't ever burn a bridge. If you dislike somebody in business, don't ever show them. You've lost the battle. That person will reappear to you at a later date. I promise you. You'll see that person reappearing. Don't show your hand. But do your best to be friends with as many people as you possibly can. And try to help people like the BC way at the end of the day. That will come back to you tenfold. I wish I knew that at your age. I would be twice as successful as I am today. And I say that humbly to you, okay? Because I was a tough guy. When I say tough, meaning I made some mistakes. I burned some bridges when I was 20, 22, 23, 24. I thought I knew it all, right? Don't. Humility, okay? Humility, okay? Never, never sort of come to the table with an attitude. I promise you it will never, never work. Think about this. Think about the last time, and I'm dwelling on this because you're young people, you're very impressionable, but it's important you understand this. Think about the last argument that you had with somebody. Did you win? Not the argument. Did you win what you wanted? Probably not. But more importantly, how did you feel afterwards? Terrible. So when you think about your balance sheet, everybody has a personal balance sheet. You get assets and you got liabilities. Always think about that. And don't be bashful about your liabilities. Just understand what they are. Okay? Always make sure, okay, you put that currency relationships in the asset column. And try to make that asset column as large as you possibly can. Okay? That will be a competitive edge at the end of the day. So I'll close by saying this. It's a tough time for the real estate business, but there's phenomenal opportunities. I stand here humbled by your presence and say to you that I'm telling you, if you put your mind to it, you can be like a next Tom Flatley if you want to be. Enormously successful, very, very generous, and living with Jesuit values. Thank you.
So you talk about all this opportunity entering the market, and I believe you. But my question is, why should we enter a market that is so cyclical and that goes through such low lows?
You know the word follow your passion? Why do people play football? Why do people play basketball at the end of the day? You know, and certain people like, why do people do wrestling? You know, WFC, whatever you call that thing, the crazy wrestling. I mean, some people like that. I mean, to me, I often tell young individuals, okay, in life, follow your passion. I've got some young individuals that come work for me, and they typically make a decision whether they want to go construction or real estate. They typically go real estate because they think construction is a blue-collar business. Construction has never been more white-collar than it's ever been today, and it's going to continue going that way. It's a very exciting business. Real estate that's bolted onto it, okay, is also a whole different ballgame. Relationship building, okay, opportunities to build things at the end of the day, and transforming communities, and also solving for problems. We get 6 million units of housing short in America today. Who's going to help build those units for housing? At the end of the day, somebody's got to do it. I think I've been in the real estate construction family my whole life. At the end of the day, I love what I do. Okay, nothing in life is easy. Okay, and business is a contact sport. Don't let anybody tell you it's not. Okay, financial services. Go to Goldman Sachs. I know a lot of my buddies there. Okay, I know a lot of these people. Okay, go to Citadel. 120 hours a week. Okay, and they're not always at the top of the rack. Okay, they end up leaving it on the table. So to me, construction and real estate development is one of those type of things. You transform in communities, you build relationships, and you make an indelible impact on people's lives at the end of the day. And if you do it right, you can make a lot of money. A lot of money. Not that that means everything. But when you make a lot of money, you also give a lot of money back and a lot of money away. That's my sense. But thank you for that question.
Hello, good evening. My name is Timilade Onile. I'm a junior here at BC studying finance and international studies. So my question for you would be, because we're at BC, I feel like we talk a lot about ethics and tying that into whatever field we're in. So how would you assess human impact when creating like new infrastructural developments and seeing how urban areas or just development in general impacts like everyday people in their lives?
My office is in a ghetto. Okay, I got a 180,000 square foot building. I got a 6.5 acre campus. I got another 40,000 square foot building in back, about 220,000 square feet. I got almost 500 employees there. That's the corporate office. And about 15 years ago, I was going to relocate our office to over the Seaport District. Who's familiar with the Seaport District? Okay. And Mayor Menino back then, I went and spoke to him, and I had a piece of land, and he said to me, I want you to think about something. Think about the impact that you're having on the community that you're in versus the community you're going to go to. Now, the community you're in, I come in the morning every morning early. I get up at 3:30, get to work at 4:30, 4:45. Okay, a little different. I got to work harder than people. Okay, I'm a severe dyslexic, and I mean that very sincerely. Okay, and there's prostitutes, there are homeless people. 20 yards from my front door, and not one, but it's safe. It's a lot of police. The impact that we have by trying to help those people and help that community, because nobody else wants to help them, I would never leave that environment. When I travel the country, I end up in Texas. People ask me where I'm from. I don't say Boston, I say Roxbury, with a sense of pride. And so to me, being an owner of a company situated in Boston, I could be at the high-rise building downtown Boston if I wanted to be. I have no interest. That's not who we are. So my business, I can transform environments. Camp Harborview, Jack Connors, you heard Jack passed away. We built Camp Harborview for the kids, inner city kids. Scholar athletes, we had probably 30,000 kids go through that program, inner city kids at the end of the day. So to me, we have a responsibility as builders to give back to the community that we take from. Now, not everybody thinks that way, but as a Jesuit, I try to live my life like a Jesuit. I'm not saying I deserve that or I live up to those standards. I try to at the end of the day. And to me, much is given as much as expected, and I try to give back. But my office is symbolic of what we stand for at the end of the day, giving back to the community.
Hello.
Hi.
I just wanted to say thank you so much for taking the time to be here with us today. My name's Shaw Blaisdell, and I'm a senior studying economics and management. I worked for CBRE this last summer.
Andy Hoare?
Seattle.
Yeah.
Yeah. And I was just wondering, you talked a little bit about loan maturity within the next 15 months.
Yeah.
I'm wondering if you could speak a little bit to the significance of the debt and equity side of the business in this time in particular.
It is it's probably the most challenging that any real estate developer has ever seen. And thank the Lord, we lobbied for the Real Estate Roundtable back in May of 23. We went to the OCC, FDIC, and the Federal Reserve to try to lobby them to try to extend all maturing loans that were coming due to creditworthy borrowers. We were very, very fortunate back then, a year and a half ago, that they gave us forward guidance, the OCC did, and FDIC, that they would allow banks to extend those loans to creditworthy borrowers. If that, we would have had an avalanche. The unfortunate part is those loans are now coming due at the end of the day. And I don't think real estate is going to be able to turn the corner quick enough to recover. And you're recapping all these buildings right now. One, there's no capital out there available. If there is capital, you're talking about 50-50, 40-60 the other way, right? Okay? So nobody has that type of resources. So almost all equity in a lot of commercial office buildings has been wiped out, as you know, this past summer, am I right? Okay? There's no capital availability at the end of the day. So there has to be a whole reset at the end of the day. And what happens is going to be some carnage going forward. And that's why I use that analytic. 100 million square feet of Class B plus office space in New York City is only worth the land that it's on after you demolish the building. Simple as that. So we're going to have a whole reset at the end of the day. Now, Boston, I have a big concern about Boston just because of some of the policies going forward. Yeah. And so I think the commercial banking system and the regional banking system is going to stay put. 40-45% of commercial regional banks are commercial real estate, so we got to be a little careful there. The shadow banking system, private financial system, is the one that's going to provide the debt or the equity for those particular institutions. But it's going to be, I think commercial real estate is going to change a little bit in this sense. I think the merchant developer that used to exist is going to no longer exist as sort of as much as it was. There'll be a very unique situation. Institutional capital, I think at the end of the day, is really going to be the ones that are going to run the race, and life companies and things like that. Because I don't think the small sort of developer anymore can really have the horsepower to compete and get the returns that they're looking for. And these life companies will accept a lower return because they're looking 10, 20, 30 years out, where a lot of developers are looking for that yield in the first 5 years and then flip the building at the end of the day. So I think it's constrained, but my point being in this is that there's opportunity out of that. Distressed assets, okay? Positioning yourself into a deal, okay? Hustling, trying to figure out how to put things together, okay? And that's why it's a young person's game. It's not an old person's game anymore, okay?
Appreciate it.
Yeah.
Thank you.
My name is Charlie. I'm a senior. You mentioned with clear data lake measuring throughput.
Yeah.
I was hoping you could explain that.
Sure, yep.
And the second one is you mentioned you're an early riser.
Yeah.
And I would like to know your tricks about that.
I'll tell you about
Yeah,
that.
I'd like to be
Okay.
better at that.
So clean data lake. Back in 2008, when the industry hit a wall, we started looking at other industries, what they were doing. And if you take a look at a lot of the tech companies, they were collecting data. And when you think about any company in America today, think about systems that they have, sort of computer systems, SaaS systems. You've got accounting, you've got HR, you've got your operations, you've got marketing, you've got branding. Those are all different systems that sort of come together, and they're disparate. So by having a clean data lake, what you're doing, you're purifying the data that comes into one repository. So each system is talking to each other. If you put input in one system, that input and that data is received by another system at the end of the day. It's much more of a coherent language and a purified language if it's done correctly. It cost a lot of money to do that at the end of the day. We invested that money quite some time ago. I also hired the head of data analytics from McKinsey. Okay, she was 10 years, she's a nuclear physicist from MIT, brilliant woman named Jiki Chin. And she helped us build that out. So now we have 29 data analysts, and they spend a lot of their time analyzing the clean data, okay, and trying to look at AI, at what questions should they be asking the data at this particular point in time. So it's having a competitive advantage, and I often say to yourself, if you can't measure it, you can't manage it. Data is our best friend, if you want to be truthful with yourself, okay? And data, if it's clean, it doesn't lie. The only thing about data I would share with you when you talk about it, this is the business vernacular. We have what is called an NFC, no fault culture. You can't implement or manage a data policy, okay, without people being honest and putting the data in. People are managing themselves. So we don't, anybody that blames anybody for making a mistake, it's a fireable offense. It's a cultural issue. Because we want people to realize we feel bad for you when you make a mistake, but if you don't put the clean data in, it's problematic for us. It distorts the information we're using to evaluate decisions at the end of the day. So it's very, very important. Getting up in the morning, as I said to you, I have to work harder than most people. So I get up very early in the morning. I don't need an alarm clock. And I get myself to go to work. And I work long hours. I love what I do. I get two things in my life. I've got my family and my 3 girls, all went to BC, okay? Law school, business school, and nursing school. And I've been chair here now for 7 years. I'll be chair, I get 2 more years, I'll be chair 9 years. The first non-grad ever to be chair of the board of Boston College, which I'm very, very proud of. I love the school. I love what it stands for. And so to me, as I continue building out my career, it's about what can I do to help others at the end of the day. And I love to be involved here, and I love helping people, but you need to have time to do that, and that's what I do. So it's my personal life and my business life, and that's what I'm very, very boring beyond that, okay?
Hi, my name is Moises. I'm a junior, and you put a lot of reliance on investing in new technology. However, real estate being like a business where you get payment not upfront and have like a lot of liquidity issues, how do you say, would you manage like investing all this technology and experimenting with things that you don't know if they're gonna like pay off in the end?
It's interesting. Two answers to your question. One, patient capital, okay? Most people in the real estate business, generationally, have been bitten by what I call the instant gratification bug, okay? I put money in, I get a return, I move on and do the next deal. If you're really in the business for a long run, you've got to be patient, okay? And you're going to have your losers. Let me talk about the technology fund, okay? Suffolk Technology. We've made us at about 46 investments, seed Series A, okay? We raised that fund. That fund is expected to return about a 3x plus return in 5 years. That's not a bad investment at the end of the day. There's no guarantees, but why it's special? How many people do you think are investing in construction solutions today? Not that many. Okay, if you look, you look right now, where Wall Street is going right now in all the private funds. Okay, it's not construction tech. So we have become a convener also in artificial intelligence, and we feel pretty good about it. Let me give you one of the analytic for you. Is we also produce software. We have a software solution called Edify. It's a pre-construction construction solution right now. We roll that out of the company, and we're selling that right now to third parties. Okay, and we're commercializing it, and we think we'll be able to do very, very well on that. Probably 2 or 3 years from now when we sell that as well too. So it's understanding what you're investing in, being narrow and deep, not being thin and wide. Okay. And really surrounding yourself with the best people you possibly can, and recognizing not everything is going to be a home run at the end of the day, okay? And enjoy what you're doing, okay? One last question?
My name is Tommy Roach. I'm a senior at Boston College studying political science and finance. I hear a lot about like the sameness of newly built developments, and I sort of think that in the pursuit of reconciling with high costs and mitigating risks, the art of the master builder in creating something like the Empire State Building might be at risk. I was wondering if you could speak more to that, especially given the sort of diversity of Suffolk's projects.
Yeah. You know, it's the artificial intelligence is going to change the way we look at buildings and design buildings going forward. There's an architect, we just did a job at Logan Airport. If you've ever been to Logan Airport, you'll see this big red, it's about $1 billion job we just finished up at the Terminal E, the international terminal. The architect of that was a guy named Luis Vidal. Okay, he's very, very well known nationally, internationally. And I asked him about artificial intelligence on the design industry. And what he said, architects in the next 5 years will become what he called selectors. Meaning that they'll go online and they'll look at a variety of different images all over the globe, and they'll be selecting images that they recommend and bringing them together, as opposed to creating their own design. Now, how does that answer your question? Because I believe with artificial intelligence and machine learning, we're going to figure out how to build things faster, quicker, and cheaper. And one of the things about architectural, I want you to think about that. Think about a building. A building always has a core to it, okay? Typically, the architectural presentation, okay, is typically gingerbread at the end of the day, okay? And so it's how you create that skin of your building and the sort of the articulation of your building. And can you do that cost effectively? And I think with artificial intelligence and machine learning, we're going to be able to do much better and much more creative than going forward at the end of the day. So I think a lot of buildings are sterile, and most of those sterile buildings are because people are looking for short term as opposed to long term. Look at this building here, the Stokes Hall, built 2012, 2013. Spectacular building, okay? All the buildings here, it's institutional mindset. We're building the Dana-Farber Cancer Institute, the new building. The building's about $1 billion job. It's going to start in about 18 months from now, okay, in Boston, okay? The building is absolutely going to be spectacular, but it's an institutional mindset. So the question is, are you developing for the short term and to flip the building? Then you don't have that much ownership of the aesthetics of the building and the functionality of the building unless you're just looking for a return, okay? If you're in the building for long term, you look at any developer that's been around for a long time. Joe Corcoran, he cared what his buildings looked like, okay? Now Tom Flatley, not that much, okay? But Joe Corcoran definitely cared what his buildings looked like. A lot of the developers we work with around the country care what their buildings look like at the end of the day. I'll give you one, gaming. Who's ever been to Florida? There's a big guitar down there in Florida, in Fort Lauderdale, Florida. Okay, we built that back in about 5 years ago. Okay, it was about a $2 billion job. It's shaped 36-story guitar. It's a hotel. Okay, and they didn't have to build that. And there's neon lights all around there. It's one of the most complicated buildings we've ever built in our life. It's all concrete underneath that skin. But the sense is they saw value in that at the end of the day. And we need to understand architecture is a language on its own. And we don't want to prostitute architecture, okay, in our communities. Because, again, people live, work, and raise families in those communities. But sometimes people do, okay? And in my opinion, not always should be the case in the day, okay? I just want to close by saying, again, thank you very much. I took you longer than I thought I would. And I say this very humbly to you again, if I can be of any help, okay, I get a lot of support around me back there. Don't hesitate to let me know. And they can do here at BC, not that I could at all. I hope you have a wonderful semester. And I want to remind you one thing. Okay, 7 o'clock Saturday night. Okay, what's going on Saturday o'clock, 7 8? Florida State. Come on, okay? Down in Florida, okay? They lost by Georgia Tech this past weekend. So we're going to have a good football team this year. I'm not going to say it's going to be great. You get a great coach, you get a great football team. We're very, very proud of it, okay? So go Eagles. Thank you very much.